As our next guest says, the bill is a budget buster, and we won't be able to hide the new debt from the bond markets. MacGuineas is president of the Committee for a Responsible Federal Budget. So, Maya, what's interesting is in May and June, as the bill was getting closer to passage, the 10-year yield actually fell, which I thought was notable. What do you make of that?
Well, there are a lot of different factors that are going on right now. So this reconciliation bill that just passed that's going to add the debt is definitely going to make markets nervous, and they'll be less reassured about the fiscal situation. But at the same time, markets want tax cuts. People who are engaged in markets want tax cuts. And there are a lot of other factors affecting all of this, primarily tariff policy. So we can't look at the markets and interpret one thing, but higher borrowing does not reassure the Treasury market.
Yeah, I just thought, stocks are at all-time highs. Bond yields are a little bit higher today. I don't know if that's a tariff effect or because of the bill. There was a Washington economist who put out a note this morning where he was saying, the fiscal picture might actually be starting to brighten, and maybe the market is sniffing that out a little bit. That we could actually, especially if you throw in tariff revenue like we're talking about, he thinks we could be headed to 4.5%, 5% budget deficits, which is practically, worth celebrating these days. But I know that the projections based right now are saying 7%, 8%, and so forth. But a lot of that depends on the trajectory of rates, what happens with the economy, and 20% of the bill is paid for itself through growth anyway.
So I think the big question is, what time period are you looking at? In the short term, we will see higher growth, as you always do, through stimulus and what could be seen as a sugar high. We are going to have higher growth in the short run if you look at just the effects of the bill. But when people are talking about, don't worry, the growth from this bill is going to fix our fiscal problems, or it's the first start, you need to look over a longer period. And there is absolutely no credible estimator across the board who thinks that this bill will generate enough growth over a 10-year period to do anything other than contribute to a deteriorating fiscal situation. Even if you look at the dynamic scores for some, it shows the situation's worse when you look at the growth effects. The reason is tax cuts help grow the economy. Extra borrowing harms the economy. And our debt is now so high that the additional effects from the higher borrowing in this bill will actually, by many accounts, worsen things more than the growth would improve things. But you've got to look over the long term. The short term, we'll see a boost in growth. Unfortunately, that will not be sustained.